you'll be looking at silver taking out a $35, I believe, which it already has. It's consolidating a bit. The cartels are smashing the market right now with paper. I do believe that silver is going to take out the $37, which is a very minor resistance. And once it does that, I don't think 40 is going to hold much water. The caveat is nobody really has the crystal ball because from 40 to 50, I mean, it's a blink of an eye in the past. It's weeks, if not days.
Buy your gold and silver at ST Bullion. Right now, new customers can get gold or silver at spot by visiting stbullion.com/new. All right, so we've got John Lee back on the channel today. John, welcome. Glad to talk to you again. It's been a little over a year since we last spoke, and there's been a lot of major developments in the precious metals and the broader global economic picture. So I'm excited to get your take on those topics today in this conversation.
Well, certainly it's been long waiting for the silver stackers. I think last time we talked maybe a year and a half ago, silver was mid-20s. And finally, much anticipated rally, and we're at the precipice of a major breakout of $35. I think that is the major resistance level, in my view, has already been taken out, and the cartels right now are just busy plugging that hole. I don't believe. I think it's going to be a monumental effort to put the silver back under the $35 lid, and so therefore, my prognosis, as I've been shared with a number of channels, that the $35 is being already overcome. There was a July futures rollover at the end of June, contract to September, and I think that's largely been dealt with. And we got a bit of a doldrum with the July 4th holidays with thin trading volume, which has been taken advantage by the cartels, trying to put the lid back in below 35. And these attempts have failed, even as this morning, the general market, that the sort of the cartels trying to take advantage of the Elon Musk's creation of a new party, exerting a bit of a pressure in the general market to try to engineer sell-off in silver. But yes, silver has bounced back to the 37, 36, just below $37. If the price trend were to stay above 35 or above 36 for another 2 weeks, probably just a week, you're going to see silver breaking out at 37, 38, and then we'll be looking at $40 plus in the not distant future.
Silver's heading on quite a run since we last spoke. Even just year to date, it's up about 25%. It has had some sideways chop recently. It seems to be butting up against some additional resistance, maybe in the mid $37 zone, but the chart looks pretty bullish. It's kind of in a bull flag right now. Now, you're saying that once we get out of the current consolidation, you're thinking a run to $40 in the short term. What do you think about a run to the $50 all-time high? I mean, in inflation-adjusted terms, that's still well below the real all-time high, but the nominal all-time high, I think, is an important psychological level. So what do you think the run from here to 50 is going to look like, and possibly beyond?
Right. My target is 70. And every time silver has decisively breached out the $35, it's gone to 50. The first time was in 1980, and the second time was in 2013. Now, I wasn't there to live the 1980 to live the 1980. I suspect it's the spillover of gold from sort of 152 to 800, and the rotation of that into silver. And 2013 was the financial crisis, the post of the mortgage financial crisis. The silver made a run from the teens to $50 in a hurry. A couple of things I like to share and then to note. The first time, after silver achieved $50 in 1980, it was almost 33 years before silver topped $50 again. So if we were true that silver is gonna break out of $50 and maybe going up to 70 in the next 4 weeks, which I believe is the case, then it's gonna take silver. Then they took silver another. First time was 33 years, and the second time was 12 years. You see what I mean? So you can see that cup and handle formation. The first cup was 32 years, 33 years. The second cup was 12 years. If your viewers and investors, the stackers, were to miss this opportunity, we're going to have to wait another 4 to 6 years before another rally. And the reassuring fact is in 1980 and as well as in 2020 and in 13, once silver taking out $35, it went to 50 within weeks. We can talk about why. It has nothing to do with inflation. I think last time we talked about the silver and gold's rise has nothing to do with inflation, but it's all to do with technical reallocation of the money from the well-to-dos. And now I think that what happened quickly is that silver has been very lackluster in my view. I was expecting silver to go to $50 18 months ago when gold took out $2,000 because based on historical standards, like you said, and gold to silver ratio, it has failed to do that. And I ponder why. I think there's a couple of reasons. One is a slowdown of China. It was a collapse of the Chinese real estate market and the equity market. And Chinese are notorious gamblers. So you have a investment demand coming out of China that was anemic to silver, and that's put a damper in silver, and that's why this was the delay. And then secondly, I think you have a lot of the North American investors that were waiting for gold to correct, right? They're saying, you know what, gold is going to come down, and then because silver is always a bit of a shadow figure to gold, every time gold went down 2%, silver went down 4%. So everybody's waiting for gold to correct for almost 18 months, but gold never did. I think to the point now, it's very clear to me, looking at the silver market on a day-to-day basis, that there is a very clear rotation from gold, profit taking from gold to silver. And now we're looking at something that we haven't really seen in a long, long time. I would say at least 3 years back to 2021, where silver went from 14 to 28. That now, when there is a correction in gold, sometimes I see a correction of gold down to 1 or 2%, but silver was barely budged. That is a phenomenon that you haven't seen in a long time, silver stacker. So that's telling me that silver is under a physical accumulation. It's not just speculative futures papers trading, and that there is a concerted physical hoarding. Finally, that's taking place. And that's irrespective of general market or what's happening in gold or what has happened in the dollar. And that is a very positive sign. So all in all, the in the past, if there's any sort of predicament to the future, you'll be looking at silver taking out a $35, I believe, which it already has, is consolidating a bit. The cartels are smashing the market right now with paper. I do believe that silver is going to take out the $37, which is a very minor resistance. And once it does that, I don't think 40 is going to hold much water. The caveat is nobody really has the crystal ball because from 40 to 50, I mean, it's a blink of an eye in the past. It's weeks, if not days. So we just have to wait and see. The strategy right now is really the last buying opportunity. I'd rather to be buying here at 36 than to be buying at 34. So you got about a few more days of buying. We're stating on the show right now, it's July the 7th. I think it's going to wander around this area for at the most 10 trading days, 10 more days. Then it's going to be marching towards 40. And after that, we could be looking at 50 in a flash.
Silver has not spent much time historically above current valuations. So it seems unlikely there's going to be a lot of resistance between here and the all-time high, because it's not like there's this hoard of silver that was accumulated at those levels that investors are looking to sell. So it doesn't seem like there'll be much selling pressure or much silver coming out to sell. I mean, for those watching, feel free to leave a comment down below if you have some sell target in mind. But I think for most stackers, it's going to be somewhere above 50. You were talking about gold. Right now, even though silver and gold have both been on a run and gold has maintained its upward trajectory, the gold to silver ratio, when you look at that, silver at today's prices, gold to silver ratio is still above 90, I think. And so that is historically the very high end. So yeah, I tend to agree with you that this is a great time to be accumulating physical. Now, I want you to kind of go back and talk more about how you say that you think the current run in silver has to do with physical accumulation. It's not just paper, because that's very relevant to stackers. And one thing that is occurring right now at the retail level, at least, is that it still remains a buyer's market. Right now, there's a number of dealers that still have products like junk silver coins they're selling it at spot, right? And that's because a lot of people, I think, have taken advantage of the rise. They're going out and selling, grandma and grandpa's coin collection that they've been sitting on for a while. But that could change very quickly. So anyway, back to you, John. You want to touch on any of those points I just raised?
At this point, it's not about sales. It's always the speculative buying that drives the market. It's the same for real estate. It's the same for gold. It's the same for silver. It's not about industrial demand. It's all about speculative demand. You're always going to have that fringe selling, and but the key here is everybody, including including their high school kids, like anybody who studies candlesticks or fundamentals of a technical charting, can clearly see, right, $35 being breached. So that is going to attract the buyers. And the reason I said that we're seeing a technical allocation from the physical hoarding, as I mentioned to you, typically for the paper market, when you have a down day for gold or up day for dollar index, you usually see the silver is the first, the most sensitive to those two indicators. So now you're not seeing that. And then usually before, when you have a smash of the silver market by the cartels on the paper in the paper market, usually you see about 3 days before the rally or the recovery begins. And the reason for that is there's margin calls and there's residual selling, margin selling, et cetera. But now, like today is a perfect example. Silver was smashed from 37.30 to down $1 almost, down almost 2%. But yet, the buyers couldn't wait for 3 days. They're back on the trail, and they started buying now even 11 o'clock. Usually, you have some fringe buying towards the end of the market, but now you're seeing that rebound faster, and they're waiting not for days, and they couldn't even wait till the end of the market to begin buying. And now I want to talk just about a bit about gold to silver ratio. There only has been two occasions where gold to silver ratio topped 100. I think first time was in the mid 90s, and the second time was in 2013. So both times when gold to silver ratio topped 100, the ratio had back down to average. One time is 50, the next time was 30. So I don't think this time is going to be any different. The reason is that gold is people buy gold for fear, people buy silver for greed. And finally, you have an equity market that's breaking out of near all-time high. We really don't need a reason. We don't need to give it too much reason, even though the economy doesn't seem to be doing too well. But the global equity markets are embarking on a bull market. You are seeing oil market that is basing in the 60s. You see a breakout of the copper market. So it's very clear to me that there's an inflationary pressure, and that there's not any imminent geopolitics or at least all of that's being factored into the equation. So speculators are coming out in the woodworks, and that is a very bullish thing for silver. And the gold and silver indicator tells me that if the ratio were to go back to even on a historical norm average of 70, then you'd be looking at silver in the 40s. But usually not usually, but the two times that gold to silver ratio peaked 100, and when they came back down, it's a minimum, at least going to go to 50, if not 30. So if you do project gold to silver ratio at 50 and the gold price of say $3,300, then you're looking at a $60 silver price. And at a 30 ratio and at a $3,000 gold, you're looking at a silver at over 100. So I do think I think we got a greater than 50% probability, probably more like 70%, that silver is not going to be resting at 50 when it gets there within 4 weeks' time, but rather I think it's going to launch to the $70 level very, very quickly.
That's an interesting point you raised about the probabilities. And I think it's important to frame these discussions that way. As you say, nobody has a crystal ball, but when we look at the probabilities of where silver is headed, as you mentioned, gold to silver ratio in 2011 at the peak of the bull market dropped to 35. And in 1980, I think it dipped as low as 17. So, you can do the math on that and look at where gold is currently, and you figure it's possible that gold continues to rise as silver moves higher. I mean, possibly. And it gives you some very high valuations for silver, is the point. You also mentioned that there's other indications that support the thesis of a silver breakout here. One that we haven't touched on yet, but I think is notable, is platinum's price action thus far
Yes.
this year. Platinum is up about 50% year to date. And that had been a very kind of sleepy, unloved, undervalued metal for some time, but it's finally starting to show some life, just as the whole precious metals complex is. If you want to comment on platinum's performance, and even palladium looks like it's beginning just to wake up here. I find those metals interesting because the supply is so small, so the potential for these massive, rapid moves exists. You know, platinum is something that I've stacked for a while. It's a small part of my stack, but I view platinum as almost like a lottery ticket.
Investors. I'm not talking about ordinary people because unfortunately, as I mean, it was coming from the U.S. Treasury Secretary Scott Bessent mentioned that 10% of the people own 88% of the equities in U.S. So I would even venture to say probably he was probably being generous in that ratio. Probably 5% of the wealthy own 90% of the world's market. So these people are running out of things to buy, literally. They're buying farmlands, they're buying condos, they're buying apartments, they're buying houses. And now I am very familiar with platinum because I started investing in platinum 10 years ago, 12 years ago. I was buying to the ratio. Well, platinum historically is trading at 30% premium to gold, and now they're trading at parity, right? And so at the time when gold and platinum was at 1300, I was like, well, it's time to buy platinum. And I endured 12 years of pain and suffering. Fundamentals for platinum could not be worse because people don't get married anymore. So the jewelry demand is plummeted, and platinum is used for auto catalytics, particularly for diesel, and the diesel cars are all but being phased out. So there is virtually no industrial demand for platinum. The industrial landscape couldn't be worse. I think right now people are buying platinum for one reason. Exactly as I mentioned to you. People say, "Hang on a second, for since the dawn of mankind, platinum is trading at 30% premium to gold, and annual platinum production is around 5 million ounces. So that's not even 6% of gold's annual production. And if you're saying gold is a good storage of value, according to Aristotle, it's divisible, it's fungible, it's store of value, and it's limited in quantity. Well, all of that applies to platinum. So that is really the only reason that I've seen that people buy platinum. How high is platinum going to go? I don't know. And but platinum is rising in defiance of everything. Partly is because the platinum and gold ratio is so out of whack. So people are buying silver for the gold to silver ratio. Well, based on that logic, then you'll be even buying even more platinum, right? So therefore, I think gold and silver, so platinum and silver are rising for the same reason, and this reason is going to be persist. So long as the big and beautiful bill being passed is going to exert more inflation. I think the interest rate could be lowered. Short-term interest could be lowered in the near-term horizon, and that's going to be bearish for the dollar, and that's going to create additional tailwind for precious metals, particularly for silver and platinum.
Yeah, it's sort of the same story there between silver and platinum as the inflation seems like it's not going anywhere. The deficits are now locked in. I think the CBO forecasts that the big beautiful bill will increase deficits by $3 trillion over the next decade when you factor in the additional interest cost. So now that that is confirmed and that the talk of balancing budget and eliminating deficits, the same story we always hear during the election year, since that's all gone by the wayside now, people are looking, where can I put my money? And they see gold. Well, gold seems kind of expensive, over $3,000. So they look to platinum and silver and other hard assets, and that will be beneficial for those moving forward. Now, you mentioned interest rates. So let me ask you about that. Last time you were on, you forecast higher rates, and that we've seen interest rates kind of go up a little bit down, so just sort of some chop in interest rates since we last spoke. Now, I know you say short-term interest rates may be lower. It looks like there's going to be some Fed intervention here at some point. The pressure on the Fed to cut rates is becoming tremendous from the political side of things, and Powell's going to be replaced. I think Trump has already stated that he won't replace a successor to Powell unless they agree to cut rates. But what's your longer term view on rates? Do you see them moving higher as inflationary pressures increase? And what impact do you think that will have on the metals complex?
Well, first of all, relatively speaking, I'm bullish of the dollar in the fiat world. I think the euro fundamentals is even a lot worse. The dollar is an IOU by the U.S. government, and the euros an IOU to nobody. Like EU, what is the definition of EU, right? So the definite for the fundamental for euro is a lot worse, and also they have lower interest rate, they have worse growth, worse regulations, aging demographics. So the fundamentals for euro is not bad any better than the dollar, neither are all the other G7 currencies. And 3 trillion deficit is actually not that bad. It's a drop in the bucket. I mean, you have a collective world economy in excess of $100 trillion, around 120 to 150 trillion. So, and dollar is the reserve currency. So, you're looking at additional 3%, 2 to 3% supply, additional supply of the dollar to fuel the world economy. It's not the end of the world. So I am not bearish of the dollar. In fact, I think the dollar is going to bounce given the terrible fundamentals of the euro and the dollar interest, the higher interest, the yield differential in favor of the dollar over all the other G7 currencies. So that's the first point. Now, last time we talked, I was very bullish of the 10-year yield and the 30-year yield, and I was commenting that the inverse yield curve, which is the short-term interest rate was higher than the long-term interest rate, is going to revert back to normal. And this is what we witnessed. Even though long-term interest rates hasn't gone up as much as I probably had anticipated, and part of that is because with all the geopolitics, there are people looking for shelter. But the 30-year rate is now higher than all of 2024. So the U.S. 30-year mortgage is around 7%. These rates are going to go up. And the yield curve, which is the difference between the short-term and long-term interest rate, is going to continue to widen. The short-term interest rate is really at the whim of the politicians and is solely at the decision of the Fed. And the long-term interest rate is a combination of the net market forces as well as also the Fed. The reason for long-term interest rates to go up, I'm very bullish of the long-term interest rates, is really not to do with the fundamentals. If you want to talk about the fundamentals, right, the interest rate would have been 30-40% because fiat is worth nothing, and the people ought to be compensated for the risk of holding paper. But the biggest reason for long-term interest rates to go up is the 2030 agenda of own nothing and be happy, and the power that be want to bankrupt the middle class. So the way you do that is almost like you were for the longest time, for the last from 2010 to 2020, there's been a decade of injecting the patient with inordinate amount of morphine. And the reason is to get them hooked on as much debt as humanly possible. And now they're withdrawing the morphine from the market. So they're withdrawing the liquidity from the market to bankrupt. This is the only reason that the short-term interest rate is being held at zero for too long is to exert that maximum impact when they start withdrawing liquidity from the market. So the Fed has a limited ability to support short-term interest rate. This is called quantitative easing. But we haven't seen the Fed do that for a long time. And in fact, if we were to look at, say, back in the early 2010, 2011, you remember the days when oil was $120 and the Fed's interest rate was like 2%. And the Fed was saying, oh, there seems to be an uptick of inflation, but that's within the normal band of the market. We have to support the economy, so there's no increase in the interest rate, right? Or every time there's a missile of North Korea flown into the Japan Sea, there's dropping interest rates. Or there's a whiff of banking crisis, and the default action was lower interest rate. But now we have oil at $60. We have geopolitics uncertainty. You have GDP that's near zero, but yet there's no talk of lowering interest rates. It was almost like the worst of the fact was a little funny, right? It's like, well, we got to keep the inflation at bay. We got to be cautious and etc. So, I mean, clearly the circumstances were all set to lower interest rate, but yet the Fed hasn't done so. And there's plenty of cases a justification could be made to resume quantitative easing, which means the Fed will print money to buy long-term loan data treasury. They haven't done that. And all the MMT, modern monetary theory, is all out of the window. So you can see that the same actors are now preaching entirely opposite set of narratives. And the reason is not to do with the economy, nothing to do with inflation. It's all to do with the 2030 agenda. They have printed money, got everybody hooked on debt for 10 years, and now they're bringing home to roost, which is jacking up the interest rate, bankrupt the middle class, so that there is the king and there are the peasants.
The old problem reaction solution technique, right? So you think that they're engineering a financial crisis here. What will be the outcome by 2030? What do you think the reaction will be? Will it be a return to quantitative easing? Will it be a complete reform of the financial system? Are we going towards tokenized central bank digital currencies? Interested to hear your thoughts on that.
So it would be a little philosophical. The 2030 agenda that's being imposed by a few, I'm talking like, a handful literally, and they already own 95% of the wealth, but they just want to have control, a total war domination. That's why you see the wars. They want to have a total submission from the two standing power that's not seeing eye to eye, that's Russia and China. And the digital central bank digital currency is going to be rolled out in the next 12 to 18 months in Europe. There's already in the testing phase, and the international banking settlement already implemented a protocol. It's called the Enbridge, and that is already been put in action for real life business and transactions. So we're going to have before it's a matter of when, but not if. A rollout of the digital currency. So once that happens, you're going to be mandated and you're going to be told when to shop, where to shop, and what to shop. And it's also a possibility that there's going to be a dual currency. The other currency is going to be called carbon credits. So, and carbon credits is going to be assigned to you that will restrict you from like, for example, there's rumor that everybody will be assigned 1,000-ton carbon credit per year. Interestingly, a trans-Pacific flight from Asia to New York is about 1,000 tons. So if you were to opt to take a vacation from US to the Orient, and that will be, and then that means that you'll be eating tofu for the rest of the year, and you'll be busing to work or riding a bicycle, and so carbon credit is in the works, and then these micro mandates is going to be implemented through the advent of digital currency, and that's part of the reason I believe that gold has gone up and silver will soon too, because that is really the only way to circumvent this micro mandates. If you think, however, that you can borrow your grandma's wallet to purchase goods, you're out of luck. I'm a Taiwanese national. I was able to enter United States and other Asian countries without a passport. They can now scan your iris and figure out who you are. As you know, like you've been submitting fingerprints, right? And your eye scan for how long? For like what, 10 years already? The system is now being completely integrated. You cannot escape the system. We're getting to that one world government and one world system in digital currency, where all of your movement are tracked by Google, and everything you do from buying an air ticket, from entering different borders, different countries, will all be tracked. So it's going to be a marriage of the social credit system to carbon credits to your central bank digital currency. That is coming down the pipe by 2030. It's unfortunate, and you're going to be restricted from buying silver, and there's going to be a limit imposed. The shops like Kitco and JM Bullions and a number of other shops, they're going to be on the blacklist. There's going to be a limited amount of quantity of silver you can buy with your digital currency. So I will highly recommend that people buy silver today. You buy that, it's not because of appreciation in dollar terms, but because you want to maintain your living standards and your way of life.
Yeah, interesting. More than just preserving fiat purchasing power, but just having some tangible assets outside of the digital system. And yeah, I mean, to your point, a lot of that has already been put into place and people, it hasn't been imposed on people. People have willingly adapted most of this tracking and, everybody carries around a two-way telescreen with them. We just call them a smartphone, straight out of 1984. But yeah, that is interesting, and I that is part of why I like to have physical gold and silver on hand. I mean, owning equities tied to those is always nice, but the base level is just having the physical metal in your hand. And quick shout out to SD Bullion. They're a channel sponsor. That's where I tend to buy mine. I just know you mentioned some of the other ones, so I wanted to give them a quick shout out.
Buy all you can at $35. Thank us later. Buy all. Now is the time to load the truck. You should be buying here at 36 rather than 2 months ago at 34. Because if you buy 34, you never know when it's going to take out 35. You buy at 36, your downside is $1, and your upside is 10 times $1, 10, 20, $30. And I pay my handyman silver coins. I pay my roofer silver coins. There's going to come a time when you try to buy gas and then you're gonna get a blip on the screen say, sorry, you bought enough gas. And you already flew 3 times to Disneyland, you already enough steak, and you're out of your carbon credit for this month. This is the only time you can buy gas. Then you go to the Chevron owner, then the store, you flip a silver coin. He's gonna gladly accept that because he's going to the same dilemma. Remember that movie? I watched that movie, Justin Timberlake. He had that movie where there's a watch and then there's credits, and then there was transact through credits. I can't remember the name of the movie. You should watch it. I think there's going to be a time where these carbon credits will be traded, and it's going to be a parallel universe. Your money, your dollar is just not good. Think of it like a Michelin's club, right? Like it's member invitation only. And that doesn't matter how much money you have, you just can't go there. And this is the goal of the WEF. They are sick and tired of sharing their space with the peasants when they go to vacation in Santorini in Italy, or sorry, in Greece, or Amalfi Coast, Positano in Italy, right? They don't want the peasants to be sharing utilities with them. And the way to do that is through carbon credits and through macro mandates, the digital currency. And it's imperative that you stack as much silver as you can. Now is the time. A year and a half ago, I think I was on your channel. I talked about that my family started buying gold for the first time in almost 20 years at 1800. And now is the time to buy silver. I cannot underemphasize the importance of buying silver at 36.
Wow. Yeah. Compared to last time we spoke, you sound a lot more emphatic about that. So, to everybody watching, do your own research, do your own due diligence. Don't just go out and back up the truck on silver based on what we're saying. But I did just pick up some more physical. Yes. Yeah. Yeah, me too. That's what I'm doing right now.
And I will highly recommend go after the numismatics. And it's not the best analogy, but it's literally the same as buying a Rolex versus buying a bit of a scrap metal. Numismatics, the margin is going to widen, and numismatics performance is going to outperform your silver rounds or silver bullions. So I will highly recommend got all the numismatics, particularly silver maple, that's 999 pure. American Eagle is around 95, but American Eagle, Canadian maples, and you can get some Cougarans or some others, privately minted logos. But get with the silver numismatics. It is an incredible opportunity right now at 36.
Interesting. Yeah, you don't hear that much in the stacking community. The basis of my stack is more the cheap stuff, right, near spot. But I do have a little bit diversified into some nice eagles and graded coins like that. One thing that's incredibly cheap right now in terms of gold is the pre-1933 gold coins. You can get an MS63 or MS64 St. Gaudens $20 US pre-1933 gold coin for like 2 to 3% over spot, which historically is very low. So yeah, especially if you can get older numismatic type coins with a very low premium like that, I would view that as a significant opportunity. John, I know we talked a lot about gold and silver here. Are there any other metals that are under the radar that you're paying attention to? I know you mentioned fluorospar before.
I've had over 25 years of experience in the mining space. I used to say 20, but in blink of an eye, now it's 25. And I spent first 10 years as an investor and invested in the junior mining companies. I've invested in well over 100 mining companies. And in the latter 10 years, from 2010 to 2015, I've been running Silver Elephant, which is a silver mining company with a project in Bolivia. But my second passion is besides silver is in the critical mineral space, in particular nickel, vanadium, and now fluorspar. The interest in fluorspar arose last year when I went to China to promote our silver company. But all of my investors in China was asking for fluorspar. I was like, why would I care for this industrial application? Well, it turned out without fluorspar, the world would come to a screeching halt. Fluorspar is required for energy generation in nuclear power, in nuclear reactors. Fluorspar is used to levitate uranium to form uranium hexafluoride, and that is gaseous to enable enrichment of uranium through diffusion and centrifugal force. So fluorspar is used for uranium, and fluorspar is used for texturing silicon in the solar panels, right? So fluorspar is used for silver, but it's also used for solar panel. So it's used for power generation. And then I also found out that fluorspar price has gone up 50%. Almost all of that is attributed to lithium batteries. So lithium is the medium to store electrical charges, but it has to be married to fluorspar to form electrolyte. So fluorspar demand is increased by more than 30% in the last 5 years because of the mass production of electric vehicles by China. And China produced 60% of the fluorspar, and they don't have enough. What they produce is not enough for themselves, so they have to rely on additional import from Mongolia, which is the third largest fluorspar producer. So Chinese consumption accounts for 70% of global fluorspar production. And then now if you look at energy generation and the silicon solar panels, and the fluorspar is also used for artificial intelligence. All the semiconductor chips coming out of TSMC require fluorspar to texture patterns on the semiconductors. And so just all these applications combined, there's amongst other uses for fluorspar, makes me speculate that fluorspar price is going to go quite a lot higher. Right now, it's around $450 a ton, which is around 20 cents a pound. And that's why it's been flying under the radar. And the United States entirely rely on import from Mexico for its fluorspar usage, which is in steel and aluminum productions, because fluorspar is used as a fluxing agent to clean up the impurities. So if Donald Trump is talking about increasing domestic production of steel and aluminum, increased power generation in uranium, in solar, in building electric vehicles domestically, and in batteries manufacturers, Elon Musk is talking about creating a first ELEF battery plant in the United States. All of them require fluorspar. So it's a very, very interesting metal or critical minerals. I highly recommend your audience look into. Silver Elephant's sister company, Cleantech Vanadium, the symbol is CTV. Over OTC is CTVFF. We got about $3 million in the bank, and we spent a year and finally acquired a fluorspar project in Kentucky, which is the most prospective historical fluorspar reserve and producing district in the United States. So I will highly, highly recommend your audience to check us out at cleantechctv.com.
Okay, yeah, we'll put a link down in the description for anybody who would like to check that out. And That kind of ties into what we were discussing a few moments ago with the trend towards the 2030 agenda, this AI trend and the increasing of electrification and the demand for power that comes along with that. One of the reasons that this ties in, I think, is that you mentioned, that the elites don't want to share their space with the rest of us, the commoners. That sort of ties in with AI in the sense that as AI becomes more capable and you're seeing these humanoid robots and drones and more and
Surveillance.
more
Yes.
tasks that we perform being replaced by those things, it really kind of frees up the elite with the 2030 agenda to just have less need for us, in their view, what might be considered useless eaters. So, I mean, that's kind of a grim outlook. Hopefully, there'll be some resistance, from an optimistic viewpoint to this 2030 agenda that you're mentioning. But comment for me on that broader trend of AI and electrification and what that's going to mean for the global economy and for us, common people moving forward.
You can paint a very grim picture. If you go to South America, as I do often, half of the male population are taxi drivers, and half the female population are supermarket checkout clerks, and both of them will be replaced, and cooks, right? Cooks and waitressing, and supermarket clerks and the taxi drivers. All these tasks will be replaced by AI, and not only is AI going to help doing tasks, but it's also going to be access surveillance, because the cartels don't have enough manpower to surveil. So you can certainly paint a very grim picture. And there's the other side of the coin, though. I do want to offer a bit of a solace in that you're going to see a absolute renaissance in industrial revolution, the fourth wave of industrial revolution, in that the cost of power is going to be come down so dramatically, and that the cost of labor is going to go down so dramatically that that the definition of assets, the cost of assets, the valuation of assets will be revisited. I mean, I'll give an example. There's 3D printing now in the world. You can build a home in less than a week at a fraction of the cost of laying bricks. So this 3D printing technology is really advanced a long way. And then imagine if the cost of energy were to go down 90% from where we are. And then if you look at it further, a lot of the work, a lot of the cost of things that you buy or services you procure are labor. So if the cost of labor go down by 90%, such as robo-taxi, then the cost of production go down so much. It's interesting then. Smart Stacker, Silver Stacker, it's almost like I remember when I was working in the Silicon Valleys 40 years ago, or 30 years ago. I'm 51. And people say the first person joining the company is the owner, and the second person joining the company is a slave, right? There's going to become a time very soon that if you have an idea, the cost to implement the idea is very cheap. So I think there is two edge to the sword. You can say that the WEF is going to have a total domination in surveillance, in assets, and then everybody become peasants. But at the same time, I'm going a little bit philosophical. The outcome of the world is the collective conscience of the minds. So I think there's going to be a time where the grimmest moment on humanity, when AI controls everything and 99% of the people own nothing, that is the time that the brightest moment is going to shine. Because, as I said, the outcome of the world is the collective conscience of the action taken collectively of the world. Um, and it could very well be a scenario where the 1% that own 99% of the assets will come to the realization that they have achieved everything that they wanted to achieve, that they would just give everything back to everybody. And now we become we become a we're gonna become a world of bliss where everybody share with everything, and that is, I just want to go, like, it is a bit of philosophical, right? But if because I was brought up in Austrian economics, probably like you are, capitalist society and property rights and ability to defend property rights and do what you say and enforce the rule of law. But then if you think a little more, I mean, that is the root of all conflicts. Somebody trespassed your property, right? Or infringed on your assets and you fought for it. That's war. That's how war came about. But I think eventually I would say probably in not too distant future, because everything's so abundant that there's no need for territorial disputes anymore. Like this epiphany is coming just this year. And I don't think that's too far out, maybe not in my generation, but maybe one or two generations to come. So in conclusion, you really have a dichotomy, but polar opposite outcomes of the world. One is a total war domination and surveillance by the well-to-do, and that is 1% of the world population, if at that. And on the other side is that everybody's going to own everything, and we're going to be, in a world of how we get started. I mean, can you imagine when we started humanity, right? Nobody owned anything. Everybody was happy. That's how God created us. I'm an atheist, but I do believe that there is infinite intelligence. And I just read this book of Conversation with God, and that we're here to accumulate wealth through experience, not wealth through money. And I think that sometime down the road, we're going to go back to how we get all started, which is we descended to earth and we're here to experience. Nobody owned anything. And now, we have select few that own everything. And that's not natural. I think sometime down the road, we're going to revert back to everybody owned everything.
Yeah, maybe we'll come full circle. I guess that's the big question, right? And
yes.
with all the big technological revolutions throughout time, I know there's always been the Luddites who are resisting. So I try not to fall into that camp, because generally we have benefited as a whole, as like a net, from those advancements. But the AI revolution seems to be in some ways unique. So it's hard to know where we're headed with it. But that's an interesting take, John. Is there anything else you want to say before we wrap this conversation up? Anything you want to tell the viewers?
The AI can replicate the body. The AI can replicate the mind, but the AI cannot replicate the soul. And the soul is a collective conscience from the unity. Let's call it God or Buddha, whatever to call it. It's coming from the same place. Everybody is coming from the same mold. And the creation and thoughts are not coming from individuals. It's collective, coming from the infinite intelligence. So I want to give an example of mind and the soul. Like the mind is what you think, right? But the soul is how you feel. And that's something the AI cannot replicate. I know it's a little abstract. I think we can expand upon that the next time, because this is a silver channel. But like I said, I'm quite cautiously optimistic. I think the darkest moment of humanity is the moment that everybody awakes and that understood that the borders and barriers they placed and the restrictions and the rules are artificial and they're artificially imposed. And that collective conscience can overrule all of that. And that we're going to be entering into a bliss, because the cost production will be go down to zero. The cost of energy will be zero, and an idea, whatever you have, could be implemented at virtually zero cost. Think for that for a minute. And so I am not in the doom and gloom. I don't see a world. I don't see a crash of the equity market or crazy things happen. Like, I see the opposite end. Go out, enjoy your day. There's plenty of work to see and experience. And my goal for this year is to experience the food I've never eaten before. So I used to hate coleslaw. I was like, who the hell want to eat coleslaw, right? So I went to KFC. I ordered coleslaw. I was like, oh, that thing tastes pretty good. I also eat pad thai. That's like Thai people don't eat that, and fried rice, right? The Chinese people, like from Taiwan, we frown upon eating fried rice, because fried rice used to be poor people, the leftovers, right? We got nothing else with leftover from the days before, and we kind of mixed it all together. But I eat fried rice. I say, oh, that tastes pretty good. These are experiences of which I recommend people try out. It doesn't cost you a lot. You don't you don't need to be told what to do or where to go. And I think there's plenty of things to experience, and there's plenty of options. I think there's like the world has unlimited potential, and there's a lot of things to try out. It doesn't matter all the rules being imposed on you.
Words of wisdom there from John Lee. And certainly, we talk a lot about hard assets and stacking silver, and I'm going to keep doing that. But you don't want to do that to the exclusion of, enjoying your limited time here on this planet. So I agree wholeheartedly with that. John, where can people find more of your work? You want to drop some of your socials? I know you're on X.
Yes, check us out. You can just Google John Lee Silver Elephant. I provide a lot of market analysis. You can see my tweet in May when silver went past $35. I said that is the time to buy, and silver's gone up around 7%. It's compared to the risk reward ratio. It is still one of the best times to buy. So you can look me up at X at search John Lee Silver Elephant, or check us out at cleantechctv.com. So it's cleantechctv.com. You can learn a bit more about Fluorspar and get my contact information there.
Perfect. All right. Well, thank you very much for joining us, John. Thanks everybody for watching. Leave us a comment down below. Don't forget to like, comment, and subscribe, and we'll catch you next time. Smart Silver Stacker out. Bye, John.
Take care.